Excited to have Richard Byworth join us. He's managing partner at Seize Capital and host of Seize the Future podcast, where he dives into Bitcoin, finance, and macro with guests like Willy Woo. Richard is also the former CEO of Equinix, the first NASDAQ-listed exchange, and Richard now leads alternative investments at Seize. Welcome to the show, Richard.
Thanks for having me, Michael. Very happy to be here.
Great to have you for sure. And when we first met, it was under very unique circumstances in the cold mountains of Poland, and Bitcoin, I think, was sitting at around $50,000, $60,000 at the time. Things are different now.
Yeah, they are. I think, it was a very interesting time. And I think it was just the beginning of it running. Actually, it ran that week that we were together in Poland. You started to see Bitcoin run. And obviously now what year was that? That was 2023?
2024, the
was it
beginning of
Yeah.
2024. And you're right,
Yeah.
it started to make a run. And there was a lot of excitement, and I feel like there was too much excitement. There was a lot of almost froth in the market. And I don't know if you saw it the same way, but then things cooled off, right? After the election, people got scared about the Trump tariffs. But if you look at Bitcoin and you compare it to, say, the S&P 500, the level at which it was able to withstand some of that pressure, it was really interesting to see. And it was the first time where I felt like this could be considered a flight to safety. The whole marketing campaign that Larry Fink had, how Bitcoin is a flight to safety, didn't really see it that much until these tariffs hit. What are your thoughts on that?
Well, I think obviously, as you know, and we talked about it in Poland, but I'm a bit of a Bitcoin maxi. And so I've always been of the view that actually, Bitcoin is the protection against the demise of the fiat system and the ultimate bomb collapse that we will see as we approach sort of the overall end game. And I think what was really interesting about what we saw in April was that Bitcoin did start to decouple for the first time, because in my job, I end up speaking to a lot of macro hedge fund managers. And it's always very easy for them to just say, yeah, Bitcoin, it's 100% or 97% correlation with NASDAQ. It's a risk-on trade. And when they started to see the decorrelation that was witnessed on multiple days of distress through the tariff process within April, I started getting calls from people saying, what is going on? Why is Bitcoin doing this? What have I not understood about Bitcoin? And I think this is really an inflection point in the way that the world views Bitcoin, because historically it's always been a risk-on asset. It's always been, that correlator to M2 money supply. And it's really, if you look at the charts, it almost looks identically lagged to the M2 money growth. Whereas this really marks a very important, as I say, inflection point where Bitcoin is starting to show the world that it's something a bit more than just a risk-on asset. And I think it's not going to be overnight, but this is a very important moment for people to start to understand, peel back the onion, do the work, and realize what this thing is.
There's a lot of great proponents out there for Bitcoin. I think about Michael Saylor. There's also Jack Mallers, and what they've been able to do in terms of create products out of Bitcoin. Some people say it's great. Some people say that it is kind of a risk.
Well, first of all, his debt is convertible debt. Second of all, the LTV that he has against the company currently, and this is, by the way, the LTV of the Bitcoin that he holds, is 13%. So Bitcoin would have to fall to 13,000 and stay there for him to potentially liquidate Bitcoin at anything close to, a negative outcome, right? So I think it really, these people that sort of doom monger strategy have really not looked at the numbers. The debt is minuscule compared to the company. It's actually 8% of the market cap. So it's very, very low. People get all confused with his average purchase of Bitcoin, and they think that that somehow is a trigger for his debt, which it isn't. All the debt is convertible, as I say, and I used to be a convertible bond trader. So I can tell you there's no margin trigger in any of his business lines that is going to create a default requirement for payment. So it really is just reliant on the redemption profile of the bonds, which, as I say, the first convertible bond comes due for put in 2027, so mid 2027. So we're literally 2 years away from the very first $1 billion payment for his $100 billion company to make if people were to decide to put the bonds. And as I say, you'd need to see Bitcoin at about $13,000 by then for him to be in a position where perhaps the capital markets would be closed to him and he would have to sell some Bitcoin.
What about 21? Have you looked at the numbers? Because my concern is new companies coming out with new solutions and trying to be more aggressive in the yield that they provide. I feel like something could fall flat here.
Well, 21 Capital is a SPAC, and I had personal experiences with SPACs, and the de-SPAC process can be a bit messy. What I would say is that it seems to be quite a clean SPAC, so there's no warrants on it. I actually, on the first day, I was like, well, let's just buy the warrants. And I went and had a look around, and there were no warrants. And obviously, it's a Cantor Fitzgerald SPAC. And I don't know if you listened to Howard Lutnick speak about warrants, where he'd always want warrants with a deal. So I was like, well, obviously, he's not going to give warrants if he's the guy that's always asking for the warrants, because he realizes the value of the warrants. But yeah, no, I mean, SPAC aside, I think it's not a big company. I think that Mallers is a very inspirational guy in the space. I've heard him speak multiple times, and I think he manages to hit a very personal, spiritual, almost tone with the way that he approaches it. It's funny, when I last saw him was in Bitcoin Amsterdam in October last year. And I actually asked him the question about Strike. Would you consider going public and implementing a MicroStrategy type playbook? And he said, it's not for us at this time. And, much as he had respect for Michael, that wasn't something he was going to do. But I think that what Michael's demonstrated since October, around that time, where he went much, much more aggressive and has managed to accumulate just so much more Bitcoin, he's demonstrated to so many more people the hunger for this in the capital markets. And if a company were to do this at a smaller scale, like a Metaplanet, which we've seen in Japan, then the returns are extremely good. Like Metaplanet was the best performing stock in 2024 with, I think, a 2,400% return. And all they did was convert a single hotel operating business into a Bitcoin treasury business. And they went super aggressive. And they actually went super aggressive before Saylor did. And so they really multiplied the amount of Bitcoin they held on the balance sheet. And I think that people have looked at what Saylor did since October and said, okay, there's clearly a lot of demand in the market for this. To your point, can something go wrong? Yeah, always. I don't know what it is because I'm looking at this very carefully and closely, and I can't see yet what would go wrong. But I'm sure there is something potentially at some point that could be challenging, because right now you're looking at it, you're saying, hang on, this is a perpetual flywheel. So here is a question for you, Michael, and I'd love your thoughts on this because this is teasing my brain at the moment. 21 Capital, or Cantor Equity Partners as they're currently called before they SPAC, is trading at an implicit around 4 or 5 times multiplier to the Bitcoin that they will have on the balance sheet on day one. MicroStrategy trades at about a 2 times multiplier today on the Bitcoin that it has on the balance sheet. Metaplanet at the beginning of this year was trading at about a 9, but they've been so aggressive that they've accretively diluted without actually any negative impact to the stock price their way to about a 3 times multiple to NAV. Do you think it's better to buy a company on a more optically cheap MNAV multiple, like a MicroStrategy, or a higher MNAV, which allows them a higher accretive dilution, like a Cantor Equity Partners or 21 Capital? Because I don't know the answer.
I'm trying to figure this out myself. I am talking to other folks that also don't understand, and I think this is part of the problem, right? There are people that don't understand, and you fear what you don't understand, and so.
I don't
When I
think
think about,
anybody
yeah,
knows the answer to that at the moment, Michael. And that's why I'm trying to just figure it out. I was speaking at the Financial Times Summit in London earlier this week, and I asked everybody approached me to talk about MicroStrategy because I speak about it a lot, and I asked everybody this question, and no one could get to the answer, and there's plenty of very smart institutional finance guys there. Um, it's just unclear because you look at Marathon right now, they're trading at a 1 times MNAV multiple. So they're basically at the market cap is at their Bitcoin holdings, and they have a live ATM of $2 billion. So they could accretively dilute, but they can't now because there's no multiple to the NAV. So if you take them versus Cantor Equity Partners right now, I'd prefer to buy Cantor Equity Partners, even though Marathon is visibly cheaper in MNAV terms. You're not going to get any value out of it unless they start issuing convertible bonds with a higher strike price to ratchet, that dilution accretively to the shareholder and buy more Bitcoin. So it's a bit of a conundrum and a difficult question to answer. So I apologize for putting you on the
no.
spot. I just wanted your thoughts on it. You're a smart guy, so I thought, maybe you could give me some ideas because I'm stuck.
Well, I would definitely have to come back to you on that for sure. One thing remains certain, Richard, is that there's definitely a race, right? We're seeing this on the institutional side. We're seeing this from countries. We're now seeing it from the States. What is stopping countries from printing their own money and buying Bitcoin?
Very good question. And I would imagine that you are seeing nation states doing that. So I also work as an advisor to a company called Jan3 that you may have heard of. They're a nation state advisory company for Bitcoin adoption, run by a guy called Samson Mao, who's very prominent in this space and was involved in El Salvador's adoption of Bitcoin as money and also as a Bitcoin standard. The interesting thing is that while we see governments doing it in our discussions with them, they're not doing it in major size yet. They're certainly not being public about it. And I would say that to answer your question, if you did see a nation state start to print money just to buy Bitcoin, I think a lot of people would say, well, shit, they're just devaluing their currency to nothing to buy as much of the hardest asset on earth. But then if they back the currency with the hardest asset on earth, do they make their currency stronger? So it's another one of these conundrum situations where it's like, which way to go? And I think viably, if you have a currency that you can print and you understand what Bitcoin is, then the first person to do it is like MicroStrategy in a much stronger position than those that follow. And when you think about the fact that, I'm from the UK originally, and, the UK have decided to, back Ukraine's war with Russia no matter what. They just continue to print money to back that war at the cost of the taxpayer and the person holding sterling in the UK. So if you look, there's a Trueflation website that shows that real inflation in the UK over the last, I think, 4 years has been 38%. Now, that is unmanageable in an environment where, people obviously have to pay to look after their kids, their families. Taxes are increasing and prices of everything are going up. Salaries aren't going up. We're in the middle of a massive deflationary impulse coming from AI. I mean, I've got very good friends that are running law firms, and they're like, we don't have to hire any senior people anymore. We hire junior people to run the, ChatGPT read, and we have 5 screens open to be able to assess which is the best contract structure that's been given, and compare the 5 of them and go, okay, fine, let's go with that. And that's being the basis for a lot of the, grunt work, legal work that was done by an army of grads, even 5 years ago. And now that's just not happening. So I think we're in a deflationary impulse on salaries. You've got inflationary everything through the money printing. So back to you on that question, is it not more responsible for governments to go out and use their depreciating currency to buy the hardest asset on the planet before everybody else figures it out and does the same?
In theory, right? You want to be the first one
Exactly.
on board to do that. And countries that have less to lose will jump on board. That will create that race. And I think it's already started. We're entering this point of the cycle where experts or people that have been around, they expect Bitcoin to continue to make its run. And there's usually this point in the cycle where you have what are called altcoins, your favorite word, Richard, which start to outperform Bitcoin. Right. Now, the 4-year cycle, really 90% of the time, Bitcoin outperforms all of those assets. Majority of the cryptocurrencies bleed against Bitcoin. Right now, Bitcoin is sitting at what, over 60% dominance. So it's very hard to argue against Bitcoin. But there are certain points in the cycle where some of these altcoins do outperform. And when you start to look at things like Ethereum or Solana, where there's a network effect there, do you ever consider allocating part of your portfolio into those assets during a shorter period of time to gain on Bitcoin?
So maybe just to quickly speak about Seeds Capital, we don't take any directional view on anything we do. We're a completely uncorrelated house in terms of alternative investments. We look at hedge funds, we look at private equity, we look at litigation finance. I know that you obviously perceive me as a critic of the entire altcoin space. I would say that altcoins in general represent venture capital, and we are not venture capital people. Bitcoin is different. It's digital gold at a very basic level. It's a whole lot more than that on a philosophical, economic, and monetary level, in my opinion. And so it's a completely different asset base. To answer your question directly about this particular cycle and should somebody think about allocating towards crypto, again, I'm never going to be giving that advice. But if they wanted to, then my advice is always seek out a venture capitalist specialist, because this is an absolute minefield. In the last cycle, we had 20,000 altcoins. Now, thanks to Solana and the meme coin situation, we have 37 million altcoins. So trying to pick out the needle in the haystack is just becoming more and more of an impossibility. I don't profess to be able to do it. I think that there are some very good venture managers out there that are extremely close to the ground, that are able to assess these protocols and see what might have some level of usability. But my frustration often with altcoins is that they're a distraction for people that really need to be allocating to something like Bitcoin to save them from the situation that's happening. I'm not talking about a portfolio allocator like ourselves who is, trying to help institutions understand how to allocate. I'm talking about real people that are fighting, as we talked earlier, to combat this 38% inflation over the last 4 years versus a salary base that's not changing. And, they need to understand the way the money works. And Bitcoin often leads you down a path of understanding the way the money works. And crypto is too often a distraction for people. So when I spend a lot of time trying to educate people and help them understand how Bitcoin can help them in their challenging situation. And more often than not, I'll get the question after a lot of work and a lot of time. Oh, well, yeah, but let's forget about Bitcoin for a minute. What altcoin would you buy? And it's like, yeah, look, that's not what I'm talking about. Like, that's a completely different industry. It's just the fact that, blockchains are similar, that you were talking about Bitcoin and crypto assets in the same sentence. But from my personal belief, crypto assets as a segment is venture capital. Bitcoin, just for easy messaging, is digital gold. And I think it's just really important to make that differentiation. Do I think that there's going to be an altcoin cycle? I think that it's been a bit diluted with this, huge issuance that we've seen out of the Solana ecosystem. But I don't have a strong view one way or another.
Your point about Bitcoin being a store of value, completely agree. But now you also have Bitcoin DeFi, you have networks that are building on top of Bitcoin. When you look at that, do you feel like that makes Bitcoin better, or does that dilute the value of Bitcoin?
That's a great question. I think that the layer 2 implementations like RGB and Lightning are important for Bitcoin to become medium of exchange. And there's a debate as to whether or not Bitcoin needs to be medium of exchange to really extrapolate value or expedite value. I am undecided on it. I do use Lightning. I do try to encourage merchant adoption. I will spend my Bitcoin through Lightning. I always have a little of actual Bitcoin in a Lightning wallet that I can spend. And actually here in Switzerland, one of the supermarket groups have now rolled out nationally the ability to pay in Bitcoin and other crypto. Interestingly, point for you, 85% of all the transactions that have been done in the supermarket since they started, I think it was about 3 months ago, have been Bitcoin, and about 10% or maybe even more stable coins, and then a very tiny percentage other cryptos. So it's quite interesting that the majority of the payments have been via Lightning on the Bitcoin network. So look, I am good friends with Jeff Booth and the team at Ego Death Ventures, who are very focused on building on layer 2s, building businesses on layer 2s. And so I'm very supportive of that as a personal investor myself. It's additive to the network to be able to build, or for businesses to be able to build on a really decentralized network. But is it important for Bitcoin at this point in time? No.
Yeah, and you mentioned Jeff Booth. I know that you had him on your podcast before. Great episode. Definitely encourage those that are watching to check that out. Richard, tell us about your fund. You kind of mentioned it a little bit.
Yeah, so at Seas Capital, I look after the hedge fund business. I joined the company nearly 3 years ago. And when I joined, Mark Seas, who's the name on the door, said to me, he said, Rich, I need you to grow the hedge fund business. It's a business that's very mature. And, it's something we've been doing for 30 years within the group. What are your ideas? And I said, well, for me, the obvious idea is crypto, because there's just so much alpha within the space through arbitrage and market making. And you mentioned DeFi arbitrage and yield strategies. These are very interesting from a market neutral perspective for trading. Like, I don't care about the underlying asset, let's say, as a hedge fund manager. I'm there for the alpha. I'm there for extraction of yield, so to speak. And so crypto, if you compare it to traditional hedge funds, crypto has this elevated level of alpha today because it's nascent. You have fragmented liquidity. You have much higher volatility. You actually have much higher dispersion. Everybody thinks of crypto as a correlation one asset, but it isn't. It's actually highly dispersed, except on days where you're going down 90%. Like crypto generally tends to do this all day long. So it's very compelling from a long short perspective as well, or a stat arb perspective. So there are multiple strategies that are very rich in alpha. Alpha being sort of the free money, or the edge that a hedge fund manager can provide above the normal market return. And so when I joined, the first thing that I wanted to do was to launch a product that allowed our investors to allocate to the various different buckets of alpha within crypto. So we launched a fund of crypto hedge funds, dollar denominated, in July 2023. And the idea is to return somewhere between 15 and 20%, which it does very neatly. And, last year was the first complete year. We returned 17.5% to investors net. And at the beginning of 2024, I was with a friend, an investor, who is a very large Bitcoin holder. I said, why don't you sell some Bitcoin and buy some of our fund, because you need dollars to finance your lifestyle. You've obviously got costs. And then you can have this nice coupon of 15, 20% in dollars on a very low volatility basis. He said, honestly, every time I sell my Bitcoin, it's like I've chopped off a limb and I regret it almost instantly. And it just got me thinking about, whether or not we could provide a product for Bitcoiners. And that's what I set about doing. So this was almost a year ago exactly. And on the 1st of March, we launched a fund of fund for crypto hedge funds denominated in Bitcoin. We took out much more of the riskier strategies like trend and long short, which are higher volatility strategies, because Bitcoiners are very conservative in the way that they allocate their Bitcoin, to target a 5 to 10% return in Bitcoin with a volatility of around 2 to 3%, which is really, on a risk adjusted basis, a very beautiful return profile. And so that's what we did on the 1st of March. We announced it and launched it. We kept it open for 1 month, raised 2,000 Bitcoin, the largest fund launch in the history of the C's group, at 200 million. So it was, we were closed for capacity by the 1st of April. So it was a very successful fund launch. So now my job is to, keep finding more managers that can provide a Bitcoin denominated return so that we can reopen and provide more capacity for our investors, because there's a lot of demand for this. And I think, I was talking to a friend that runs Bitcoin Policy UK, and I said, you look at Michael Saylor, you look at everybody that just starts aligning with Bitcoin, and same for us as a business. Once we launched that Bitcoin product, it just changed so much. We ended up with a completely oversubscribed fund, with investors knocking the door down, and doing something that really aligns very strongly with our values. So yeah, I'm very happy about the product.
When you and I first met, Bitcoin was, like I said, 50, 60,000. Now we're at 100. Does it get easier as Bitcoin does better, or does it get more challenging?
It's a very good question, because in the Bitcoin fund, there's zero directionality to it. So what we're trying to do is provide a return on Bitcoin, right? So it doesn't necessarily get easier. The alpha generally in the space comes from retail investment coming back into the space. So actually March was one of the worst months we've had since we launched the fund of funds. But in the Bitcoin fund, we were still positive, because our managers were just doing very low risk strategies that were still able to eke out returns. I would say the vibrancy from this industry does come from participation. And even though we're looking at $100,000 Bitcoin and above $100,000 Bitcoin, we're having very little retail participation, and it's retail participation that drives the alpha in the industry. They'll drive the basis funding on the futures to get their leverage, which feeds our fund managers because they're funding them at more and more expensive levels of funding because retail will come in and pay any price to get extended leverage to the space. But unless they're getting super excited, they're not doing that. And again, I think the altcoin boom or massive expansion of the altcoin space has meant that more and more retail have been burned, unfortunately, on more and more degenerate projects. I mean, you saw even President Milei in Argentina ended up launching, I don't know how in the know he was about what he was really doing, but there were some scammers that has sort of managed to turn his ear or turn his head, and look at all the people that lost money because of that. It's a real shame, but I think it's damaged the altcoin run that we would be seeing with this massive price run that we've had in Bitcoin. There's not that much retail participation.
That's a big knock on Trump, according to a lot of people in the industry as well, where he's doing all these great things from a regulatory perspective, but then launches his own meme coin. Not everybody is for that, right? And we look at that and we see the perception that the industry gets.
It's interesting that the SEC hasn't actually provided a framework for meme coins. I think, I mean, I think it's really disappointing for everybody, including Bitcoiners, that Trump went ahead and did that, who we thought would be only beneficial for the space, given what the previous administration had done to destroy the space. It was very disappointing to see that.
Yeah, personally, I'll definitely take this than the latter. However, to your point, sometimes there's a little bit too much going on. But Richard, I bet you weren't expecting to have a conversation on meme coins when you got on this podcast. So where can people learn more about Seize Capital, and where can they tune into your podcast?
Yeah, so seizecapital.com is our website. We're on LinkedIn, we're on Twitter. Not so active on Twitter for the group at the moment, but that'll change. I have my own podcast, Seize the Future, SYZ, the Future, where we get into sort of more broad global issues like geopolitics, energy security, water security, debasement of currency, endless wars, these types of things. And I'll always have an expert come on, and I like to ask them their opinion on how to allocate capital. And what I've found is, which is always interesting, is that more and more of these obviously deep thinkers and super smart people end up gravitating towards Bitcoin as a way to allocate at least some of their capital. So that's a lot of fun. I'm on X at Richard Byworth and LinkedIn as well.
Perfect. I'll be sure to include all of those links in the description. Richard, this was a lot of fun. I know you'll also be at the Bitcoin conference, trying to make it out there. I hope to be able to shake hands in person. But this was a real pleasure. Thanks so much for dropping some knowledge on us.
Michael, thanks a lot for having me. Great to see you again, and I really look forward to seeing you in Vegas.